what do they tell us about the relationship between inflation and crypto? Is there a relationship there?
It's a really good question. It's actually something I've been looking into for a really long time. I remember talking to investors last year who had predicted that we would see inflation as we were recovering from the pandemic. And so a lot of these investors that I had been speaking with were loading up on things like real estate and rare collectibles like whiskey, and as well as cryptocurrencies and Bitcoin in particular, with, as Katie mentioned, the argument being that you have this finite supply of Bitcoin, meaning that it could potentially act as an inflation hedge. The counter argument is that its history just isn't long enough to actually be able to say that it will definitely act as an inflation hedge, but then this morning you did see Bitcoin hitting a new record high. You see it hovering around the $69,000 mark per coin. And so to a lot of people, it does make sense seeing that inflationary, hotter than expected inflationary print this morning and Bitcoin hitting that new high, that relationship does potentially exist.
So Juthica, you sit at a really interesting desk, basically, looking at what institutional clients are doing. I'm curious, though, does that narrative hold water with those institutional clients? I mean, who is Bitcoin the new gold for?
Yeah, absolutely. I mean, I think a lot of institutions are holding it as part of a diversified portfolio. And obviously, Tim Cook came out yesterday and said that on a personal level, he holds it for that same reason. And I think the inflation numbers this morning just show that it's not so much a theoretical or academic argument about inflation, but it's something that consumers are really feeling in terms of food and energy and cars. And having an asset, a fundamentally new asset class that is fixed in issuance like Bitcoin, does provide that inflation hedge. Now, obviously, Bitcoin is still early and it is still fairly volatile. We see that on the option side in particular. So it's not going to be perfectly correlated to inflation, but there's no doubt that that's a real impetus for investors and institutional folks who do own Bitcoin.
So Juthica, talk a little bit about that, because here we are at a time when we're close to record highs for Bitcoin. What if an institutional investor comes to you, or perhaps you can answer this through the lens of retail investors, because that's who we're appealing to with this show. What if they say to you, okay, Bitcoin's too high for me. I feel like I missed out already. Is it too late?
Absolutely not if you have, a really the kind of view of the world in terms of what is possible in terms of global Bitcoin adoption. We're talking a fundamentally new currency that anybody in the world can use. And I think that market is very sizable. Now, that said, in general, whether we're talking to institutional clients or retail clients, we always encourage them to size their trades and allocations appropriately. Look at the fact that Bitcoin, even at these levels, it's getting more mature, but it's still about a 90% annualized implied volatility, which is around maybe a 4% daily standard deviation. So, if you don't really have that quite risk tolerance to sustain some of these ups and downs, maybe consider a lower allocation, for example, to that aspect of the portfolio.
Juthica, I was rewatching some of your appearances on Bloomberg TV just a couple of weeks ago. I think you had said that you should never say never to Bitcoin hitting $100,000 by the end of the year. So I'm hoping you can sort of walk us through what you do expect for crypto prices and Bitcoin in particular through the end of the year.
Well, I think when I say never, part of that is because we do see the December 100K strikes trading. We've seen the 120Ks. We see out to March even more bullish bets. And now when folks trade options, they're not necessarily saying that Bitcoin is definitely going to hit these levels, but it speaks to an implied distribution that is probably wider than it might otherwise seem if you're just looking at the price around 67,000, 68,000.
And Juthica, focusing on the futures market in particular, I saw an interesting stat yesterday that was that if you look at the number of open contracts on the CME, it's down 32% from its peak in late October. I'm curious what that tells you, the fact that we are seeing some of that, activity that we saw in the option space cool a little bit.
Well, I think in the case of the CME Futures, that's probably tied to the ETF, which was still a really great moment for Bitcoin, for adoption, for the regulatory imprimatur of the SEC being okay with a Bitcoin product. But that Bitcoin ETF being based on the futures probably drives the open interest statistics there more than some of the supply demand that we would see directly in the spot exchange.
Hey, Juthica, I'm wondering about other cryptocurrencies. Bitcoin has certainly taken a lot of our attention today in recent weeks, but what are you feeling about Ethereum right now?
We're definitely seeing a lot of bullish Ethereum flows as well. The December 10,000 strike calls are trading. The March 15,000 strike calls are trading. You know, I think Ethereum has some of the same sort of like captures the tailwinds of Bitcoin. On top of that, they had the protocol upgrade in August, which burns Ether. So about 800,000 Ether has been burned so far. And in general, they benefit from the increased activity, whether it's in decentralized trading, decentralized finance, or NFTs. And so we're seeing a lot of that play out with Ethereum as well.